Hello, this is the tradesight stock market preview and U.S. economic data roadmap for the week beginning Monday, June 3rd, 2013. We are in June already, almost halfway through the year, one more month, and ending Friday, June 7th, 2013. Start out by looking at some of the index action here on the daily charts. Now, we've been following this S&P trend line for a long time now. It started back at the low in the middle of November. Created the bounce point at the end of the year, and so at that point you've got a trend line in place. Bounced off of it precisely late in February, again at the beginning of April. It broke it temporarily in April, but came right back up for the retest, and then basically bounced off it and accelerated here. We got that big outside day down just over a week ago that we were talking about on heavy volume. That's a topping action in the market, very, very strong, and you can see so far that has been the top. And now we are in danger here after Friday's sell-off late in the session to end the quarter, to end the month, which is a little unusual. We are now down right back near that trend line. So again, the thing this week, as we are trading the markets, is going to be to watch that trend line, see if it breaks. And again, if it does, and we may not complete all this within the week, but if it does, we've got to break the trend line, turn back up at some point, retest it, and if we fail from that point, that's going to be where the market's going to really start to get negative, and you start making a lot more money on the short side than you would on the long side. So let's the S&P look. Let's pull up the NASDAQ 100, the other major index that we follow. This one obviously was a lot less interesting in January, February, and March. Very flat, made the tech stocks almost unbearable. But the difference is, while the S&P had a series, just that steady uptrend that gave us a series of our seeker sell signals, the 13 sell signals, the NASDAQ 100 never really had that, and you can see we got 113 back here in January, and that actually was sort of the top area for a while. That resistance line was used up here, and then we rolled back over, but never really went anywhere to speak of. But now we've actually got some energy for this move here, and you'll notice that we're 12 bars in to the seeker sell signal, so we need maybe one day up, and you could actually get bar 13 there. So if we do get a little bounce early in the week and then get the 13 sell signal on the NASDAQ, then start heading down the market and break that trend line we just looked at on the S&P, that would be sort of the process you'd see for things getting pretty ugly out there. So again, we're going to want to make that flip as soon as we start to get some confirmation. Be spending a lot more time looking on the short side, not fighting the market. But so far, remember, no matter how bad it looks, the uptrend is still in place. Here's a look at the semiconductor index. It's going to be 11 bars up as of Friday, as you can see here, or 10 bars up as of Friday. On the seeker signal towards the 13 sell signal that we would need. Here's the biotechs, not nearly as interesting. They've been climbing, but over the last several months since March 1st, but they've been dead flat for the last 2 weeks or so. Keep in mind we did have a slow short week this last week with the U.S. holiday on Memorial Day. Let's take a look at some of our key tech stocks that we follow, as we always do. Apple inched a little higher this week, just slightly. Still got a gap to fill at $370 below the chart here on Apple. But other than that, it's got sort of an inverted cup or head and shoulders forming, maybe a cup and handle here. A little bit of bullish action on Apple, even though it's in a general downtrend. Google pulled back a little bit since they completed their I.O. conference a couple weeks ago. Didn't do a lot this week, to be honest. Here's a look at Netflix. Closed the week right where it opened the week, right where it closed out last week, I should say. So not much to look at there. Another one we trade is Amazon. Didn't do a lot either. Now Rich been monitoring the GDX. Made a very specific call for a swing trade. You can see this on the YouTube. He put the YouTube video up right as this 13 buy signal was forming on the daily chart of the GDX. And so far that has been the low. We've turned up here and had the last couple of days strong to the upside. So his call that he made both for our subscribers and for non-subscribers over the YouTube channel right there at that buy signal has come to fruition at this point in time, starting to work in his favor. He's covering that one almost daily in the lab. Let's also take a look at some of the oil, the crude oil inventories, the QM futures contract. Okay, this has got our levels kind of overlaid, so it looks a little messy, but you can see that this one is heading back down, closing at just under 92 for the week. That's the low for the last month or so. Gets back in that high 80s range. Will be real interesting. Stalled out right at this green line here is a static trend line. So 1, 2, 3 times we've hit that, have not been able to get through, which is pretty interesting. And here's a look at the gold futures. Had a big outside day down on Friday. So after kind of an uptrend, boom, they just crushed it. And that certainly isn't bullish for gold, which has been in a downtrend here for a while now. So those are the daily charts. That's what we've been looking at, monitoring. Like I said, overall, we are coming close and setting up the potential of that downtrend coming into play instead. But count your chickens before they hatch. We take it slow. Here's the ES. This is the S&P mini futures contracts. This is 30-minute bars for the week. So basically, we closed right here on Friday. They opened the futures for about 2 hours on Monday for the holiday. That trading doesn't really count. Here's your gap up Tuesday morning that held for about an hour and a half, and then that was the high of the week. We did roll over. We traded about only about 45 points or handles of range on the ES this week. Closing down Tuesday, gapping down Wednesday, and closing about even. Tried to rally Thursday and failed. Friday, remember, was the end of quarter. I'm sorry, I keep saying that. End of month, and should have been pretty flat, and very late in it sold off. Now keep in mind, this gets the statements printed for the end of May, so if they were holding anything in place, that is no longer necessary. The market will start to work and go through its usual machinations again. Is Monday going to be in the beginning of June going to mean that allows the stocks to start moving up or down now that they're free of the end of month statements? Be very interesting to watch all that. We also need to take a look at economic data coming out this week, as we usually do. And what we've got here is starting on Monday, 10 a.m., we've got the ISM index and construction spending. Those are both pretty important for stocks. So 30 minutes into the week, we're going to get a jolt, more than likely. Might be a little slow that first half hour as people wait for that data. Auto and truck sales in the afternoon, no big deal. On Tuesday, trade balance. It's one of the bigger numbers you get every month. It's an hour before the bell, so let's focus on that. On Wednesday, that should cause a gap, by the way, on Tuesday. On Wednesday, we've got MBA mortgage index, ADP employment change, revised productivity for Q1, unit labor costs for Q1, factory orders and ISM services at 10 a.m. Eastern Time, 30 minutes into the market. The factory orders can be a big deal. Crude oil inventories, the Fed beige book in the afternoon, don't forget that. That can move the market as well, coming back from lunch for the last 2 hours. Thursday, challenger job cuts, initial and continuing jobless claims, and natty gas inventories. Friday is the big one. Unemployment rate with the non-farm payroll data. See how the sequester is impacting the employment situation here in the U.S. And that is probably the most important data of the week, so we'll be focused on that. And the trade balance on Tuesday. There is no Fed meeting. There is no options expiration. We're 3 weeks. We're starting June, so we've got a full 3 weeks before the main options expire for the month. So that's it. That's the roadmap for the week. Obviously, the chart's brought to you by eSignal 11 as usual, and we will be in the trading lab calling it both ways, long and short, as we see it throughout the week. We hope to see you there.